Private equity firms are some of the most powerful players in finance today. They buy up companies, restructure them, and then promise their investors big returns. But Warren Buffett, the Oracle of Omaha, doesn't buy the hype. In fact, he's openly skeptical. Buffett once said, "In the last 10 years, private equity has not earned what they've promised. They have promised higher returns, and they have not delivered." That's a strong statement. But he didn't stop there. He went after the way private equity firms present their results. They play games with the numbers. They pretend they're making more than they really are. They're typically very dishonest in the way they report. What exactly does that mean? Private equity funds often use tricks like adjusted EBITDA or other creative accounting methods. On paper, these adjustments make a company look more profitable than it really is. To investors, it looks like the fund is crushing it. In reality, the numbers are inflated. Buffett explained, "If you look at the numbers they show, and then you look at the reality, they are worlds apart. And they know it. It's built into the system." Think about that. Some of the most sophisticated firms in finance, the ones managing billions, are making performance look better than it is. And as Buffett points out, it's not by accident. This matters because Buffett has always preached the importance of honesty in business. He once said, "It takes 20 years to build a reputation and 5 minutes to ruin it." If you think about that, you'll do things differently. That's why his criticism of private equity cuts deep. He's essentially saying their model depends on bending the truth. For ordinary investors, this is a warning. Don't get fooled by glossy reports or promises of guaranteed high returns. If Warren Buffett doesn't trust those numbers, should you? Buffett reminds us, you can't cheat in the long run. The numbers will always catch up with you. And that's the core of his philosophy. Stick with simple, transparent businesses. Companies you can understand. Companies that make money the old-fashioned way. Because while private equity firms are chasing short-term wins and dressing up their books, Buffett is building wealth through patience, discipline, and integrity. And that's a lesson every investor can take with them. If something looks too good to be true, it usually is.